Hello, everyone, and thank you for joining us on this Wednesday, and welcome to this educational presentation. Now, today I want to talk to you about trading strategy if you like to buy low and sell high. Now, if you've attended my presentations in the past, I've often stated that there are actually only two ways to trade. One is to be a continuation type of method, whereas if the trend is up, you continue to buy all the way it's going up, buying high and buying higher. Or if it's going down, you do the same thing, you continue to sell as it continues to go lower. Now that's a continuation style of trading. The other style is what we're going to be discussing today. That's where you buy low and sell high. This is called a pullback style of trading. Well, let me share with you what the standard definition of a pullback is for those of you who aren't familiar with it. A pullback is in an overall uptrend. A pullback is either a large, moderate, or shallow sell-off. So as you can see, we're not buying as it's going higher. We're actually buying at these overall uptrend spots and looking to buy at these opportune lower levels. Do you see how this is different from buying all the way up, in that if you're doing that, you're basically just trying to get a better price. So what we want to do is actually look at these lower levels to enter. Now, conversely, in an overall downtrend, a pullback is either a large, moderate, or shallow rally. So as we can see here, in hindsight, obviously, this is an overall downtrend. So what we're looking to do is to sell in these high probability areas where there's a bounce or a rally. That gives us a better price, and we feel more comfortable that we're not paying at the low or paying at the high. We feel we're getting a nice advantage there. So this lends us to ask the question, is there a particular strategy that's specifically designed to identify these high probability pullback setups? Because they are actually difficult to identify, because how do you know it's not just going to keep going lower or keep going higher? And how do you know it's a pullback that is just a short-term bounce or a short-term sell-off? Well, here's the good news. There actually is a strategy designed to identify these with a high level of consistency. And that's what we're going to be talking about today. Now, if you even want some better news, these signals are auto-generated on our platform, the PTS Primo Charting Platform, that identifies these pullback strategy setups. So this promises to be a great educational presentation today. Thank you for taking time out of your Wednesday to join us. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my free Wednesday webinars, just to let you know, we are a little bit different from other webinars you may have attended, and that our only purpose, our only goal is simply to educate you as traders. If you've come here today thinking what I'm going to tell you what I think the market's going to do, or what a particular stock's going to do, or what the perfect time frame is to trade, well, you've come to the wrong place. I know that's the way most webinars go, where someone will tell you what their opinion is. But see, we don't believe in that. In fact, we feel that's a disservice to most students, because the entire industry is based on you going to a chat room or a trading room, or listening to some guy on TV, or waiting for the earnings to come out, and then you make your decision, right, as to what to do. Well, if that works so well, then why do 80 to 85% of all traders fail? Obviously, that doesn't work very well. There is no consistency in that. In fact, I can prove it, because I was basically taught the exact same way when I first started learning how to trade some 44 years ago on the floor of the exchange. We did the same thing. We listened to all the trading gurus. We didn't have chat rooms or trading rooms then. There was no internet, but we had newsletters, and nothing really worked then. So it's not about to miraculously start working now. The only thing that I have found in my 44 years of trading and teaching that sustains you is when you make your own trading decisions, when you have your own sound plan that you feel comfortable with, and then you make your decision. You don't have to wait for earnings. You don't have to wait for some guy on TV to tell you what he thinks the market's going to do, or some stock. You make your own trading decisions based off sound fundamental education. I know your first question is, well, Steve, I don't have that education. I haven't been trading long enough, or I don't have the skill, or I wasn't, I didn't go to business school. I'm totally in a different field. That's okay. That's the purpose we provide here at Specialist Trading. We provide you with all these things so that you don't have to waste your time, and most especially your hard-earned money, searching for that holy grail. And you'll see that today in trying to teach you this method that really has a high probability of buying low and selling high. Now, before we begin, As always, we're first required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that since we are an educational company, all examples are strictly for educational purposes only. Now, a good way to get more education on a daily basis is to follow us on Twitter. There's our handle right there, abbreviation for specialist trading. Every day I post different information. Sometimes I post little bits of financial wisdom. Mostly I post signals that our strategies have generated, and I give a little bit of brief explanation as to why they were generated. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now remember, we are first and foremost an educational company only. So that's our main goal, to teach you how to trade. You see, a good mentor does not trade for you, but he teaches you how to trade. So that's what we want to do here at Specialist Trading. I'm happy to say now that we have students in over 115 countries and in every state in the United States. Lots of great traders for the first time becoming consistent. Why? Because they've got some sound fundamental education and they're making their own trading decisions. They're in charge of their own trading destiny for the very first time in your life. So it doesn't matter if you've been trading 40 years or 40 minutes. Everyone gets the same basic benchmark of education that we provide for all of our methods, okay? Now, this is a classroom, so a couple of announcements before we start. We are new to the Zoom platform. We've had some mistakes in the past, but this is not an interactive webinar where we're going to be seeing pictures of each other and talk over each other. So if you have a microphone or a camera enabled right now, just disable it, okay? This is just a static PowerPoint presentation. So please disable all of your microphones as well as your cameras. The other statement I want to make is that you're going to be able to ask me questions, but please ask me questions at the end, okay? You can go to your chat box and type them in, and I promise I'll get to each and every one of your questions, okay? The last thing is we record all of our webinars, so if you have to leave early or if you're having technical issues, don't worry. Each and every one of you will be sent a link to this recording, all right? So remember, disable your cameras as well as your microphones. Ask me as many questions as you like, but wait till the end of class and you'll each get a link to this recording. All right, with that stated, let's begin today's educational presentation. Let's begin. And remember, let's basically give an overview of what we're going to be talking about today. We're going to be talking about pullback. So let's look at this kind of generic way in which the pullback concept is generated. What you want to see first with any type of pullback trade is a trend that's established, okay? This is called phase one, the beginning of a trend. And then here's where students have trouble with phase two, because we have what's called a counter trend. The reason why most students have trouble is because they think that this is the beginning of a new trend. In this case, it'll be down. So if you were long and having a nice profit, or you're thinking about getting long, you say to yourself, oh, well, look at the trend change. We must have topped out. That chat room I went to says that you got to sell because we're overbought. So this is the beginning of a downtrend, and this is where most students make a mistake. Now, if you have some formatted requirements, you can see if this is the beginning of a downtrend or actually just a pullback. If it meets all the requirements for a pullback, this is not a place to be selling. This is, for all intents and purposes, this is a buying opportunity. But you need some requirements or rules to be met to tell you when it's time to buy. If all those requirements come into place, well, this is where you want to buy right here, because there will be a resumption of trend to the upside. So see, you're buying at a lower level where most everyone is selling. What we used to say on the floor is everyone was getting out of the pool, and that's the time you should be getting in, okay? So this is the basic standard philosophy and concept behind a pullback entry. The only difficulty is it's very difficult to find out if it's a pullback, meaning just a short-term sell-off, or it's the beginning of a new downtrend. This is where students have difficulty. So we have to ask ourselves once again, is there a strategy specifically designed to identify these high probability pullback entries? The good news is, yes, there is. It's strategy number 9. This is one of our premier pullback methods. It's great because it can be easily transferred onto any market and any time frame. Let me share with you some of the highlights. It's a buy low, sell high pullback method. Now, the way it generates its signals is by applying proprietary indicators. Okay, now these indicators, one is a very common indicator that most of you have used or have on your platform. Another one is a proprietary indicator. Now, their relationship to one another will generate whether these are valid pullbacks or not. As I said earlier, you can apply it to any market, any time frame, in any direction. Now, because you're going to be buying, or the signals will be generated at a lower level, this makes it ideal for option timing and option trading. Why? Well, because let's say you're using a method that is based on breakouts, okay? Now, if you go to buy the market when it breaks out, whatever you're trading, usually the premium for options is going to be very expensive because you're buying at its high. This is perfect for that because usually you'll see a strategy number 9 buy signal at the bottom of a sell-off, which means that the premium will be much lower, okay? Or you'll see a sell-off, or I should say a sell signal at the top of a rally or a bounce, which means the premium will be much lower. So this is great if you're an option trader. Now remember, this isn't an option class per se. We're not going to tell you what the right options are to buy. That's up to you to decide. We're just sharing with you high probability setups. Now, with all of our methods, with all of our strategies, we don't ask, we require that every student paper trade first. This is one of the most important things about learning how to trade. I've been trading for 44 years now, and guess what? I'm right now, as we speak, paper trading a method. I've been paper trading for about a month now because I want to make sure that it's valid. And so this is something that you have to do. You have to paper trade first just to fully understand and fully see if it's a valid method and to see how you interact with it. Sure, it may be a nice method that generates really nice results, but if it generates too many signals, if it has too much risk through your paper trading, you say, well, it wouldn't be right for me. I'm not going to feel comfortable trading this. So this is the importance of paper trading. All of our strategies, all of our methods come with a high level of consistency. Now, I know consistency means one thing to most traders, but the actual definition of consistency is an awareness of losses. And that's okay. We are aware that this method will have losses from time to time. But a consistent method is one that's able to recoup those losses. Oops, kind of went ahead of the game here. One that's able to recoup those losses sooner than later. So that's what we're looking for. We want to make sure that you can have a loss from time to time and you can recoup it. Now let's look at some of the highlights of this particular method, okay? It employs 2 simple indicators, all right? Now remember, a signal is generated based on their relationship to the price. That automatically produces the signals. One of these indicators is very common, but the other one is a proprietary indicator. Therefore, it's an indicator-based method. Now in an overall uptrend, the buy signals will be generated during a decline. Obviously, that's the pullback. In an overall downtrend, sell signals will be generated during a rally, okay? So that's basically the gist of this. We can't give away the rules because for all intents and purposes, there's really only about 3 rules in this method. And if I gave you one, most likely you would be able to back test it and auto reverse generate it and say, oh, I figured it all out. So we can't do that. It wouldn't be fair to our students around the world who already are course members of the strategy number 9 method. But let me share with you exactly how it works and the concept. All right, so let's look at the process. And before we begin the process, once again, remember, if traders have come in late, this is not an interactive type of presentation. So please disable your cameras as well as your microphones. So let's look at the trading process. And remember, we make it simple on our platform. Here's that chart we looked at earlier. Obviously, we're in an overall uptrend, looking back in hindsight, right? But how could we have purchased at those lower levels, those sell-offs? Well, here's how simple it is. On our platform, click on strategy number 9. Now remember, we teach you all the rules. So this is not a black box where you just click on the buy and sell signals. But if you want to make it simple, click on strategy number 9. In the drop-down menu, click on signal arrows. And automatically, you'll see where all the buy signals are. Now, each and every one of these buy signals met all of the requirements right at these lower levels. And once again, we teach you what basically generates these. This is not a black box. This is not something where you just say, well, I'll just click on arrows. I don't know what or why these arrows are being generated, but I'll just take it with a grain of salt. Remember, that's the way most webinars and methods are. We want to teach you what to look for and then have you decide how to trade it. Let's look at that older chart we looked at in URBN. Okay, obviously the overall trend is down. How could we have taken advantage of selling at these little bounces here before the trend resumed lower? Well, click on strategy number 9, click on signal arrows, and check out all the sell signals that were generated. Okay, think you could have taken advantage of buying some cheap puts or some type of spread strategy to the downside. Remember, it's up to you how you want to apply this to your trading. So let's look at some current strategy number 9 examples. Now that you understand the process, now that you see how simple this is, let's look at some current examples, because I know you've most likely been like me. You've been frustrated when you've gone to a webinar and you see these great signals and you go, wait a minute, that was 2 years old, or that's about a year and a half old. I want to show you what you could have captured within the last month or so. And some of these examples I'm going to share that could have been captured within the last week, just to show you how consistent this method actually is. And remember, everything you're seeing today is generated using our platform, the PTS Primo Charting Platform. This makes it simple to identify these pullback strategy setups, and they're auto-generated as well. Okay, let's look at CUCOM here. This is the middle of July. Obviously, it looks like we're in a little short-term uptrend, right? It's a standard definition, higher highs, higher lows. And then all of a sudden, when you think it's going to go higher, this happens. So you say to yourself, wow, I was thinking of buying this, but now we're in a downtrend here. That chat room I go to doesn't like this. They say that it's probably going to make lower lows. There's going to be some bad earnings coming out, or it's just not a good buy here. So it broke that low that we had recently. So I'm going to stay away from this. This is in a downtrend. Okay. This is the way most traders make their trading decisions. This is the way I used to make my trading decisions some 44 years ago when I first started trading. But guess what? According to the rules and requirements of strategy number 9, this is not a downtrend. This is not something that you should get out of the market or look to sell. This is actually a buying opportunity because it's a pullback. Now, once you learn the rules to strategy number 9, you would have also identified a buy signal right here at the very low where most traders were exiting. Strategy number 9 was saying this is a buying opportunity right here. Had you bought, could have potentially made 12 points within the next week or two. Okay. See, this is why most traders fail. You're listening to an outside source, usually some guy in a chat room or some guy on TV or some blog, and then you're listening and letting them tell you what to do. Once you learn how to listen to the market, that's the only thing you ever really have to listen to, because it tells you just about everything you need to know. And guess what? It's a lot simpler to follow. Here's another example, TMUS, okay, T-Mobile. Obviously, we're in an uptrend, right? Higher highs, higher lows. Well, not really. According to the rules, we're actually just in a pullback. This is a bounce in an overall downtrend. And on top of that, all of the requirements were met for a sell signal right here. So rather than continue buying and saying, wow, this is great, I'm making a lot of money being long this stock, you should have been selling, because look what happened to all those gains there in the last week. They all were wiped out in 1 or 2 days, and you could have potentially made a quick 6 points in just a couple of days, okay? Would have been a nice little option trade. Here's an example in XLNX, okay? This was back in the middle of July again. Looks like a downtrend, right? Well, strategy number 9 generated what we call a little mini cluster. That's where you have a couple of signals right next to each other. These are high probability setups, because usually what happens is there's going to be a nice move when it generates more than one signal. And you could have taken any of these signals and potentially captured 25 points coming into the first week of August. I know a lot of you are saying, well, Steve, that means I've had to sell at the very high if I want to get 25 points. Well, sure. But remember, in our course, we teach you upwards of 7 different exit plans. Remember, our job as an educator is to provide you with information and education that has stood the test of time, that has high level of consistency. Your job as a trader is to learn how to apply these by practicing with each one and then seeing which one makes you feel the most comfortable. So one trader may have said, you know what, I'm going to get out with a couple of points. I'm going to use this particular exit method because I like to get in and out of trades quickly. Another trader would have said, you know what, I'm going to use this other method where I would have gotten a nice 18-point gain. Or another one would have said, I'm going to stay in this. There's no reason to sell yet because I like to use the method that keeps me in for as long as possible. How you decide to enter, how you decide to exit, how you decide to place your protective stop are all up to you. That is your decision, and that's what's going to make you a sustained long-term trader. But the thing is, you've got to decide for yourself. We provide you with the information, so we make it easy for you to decide. Now, our next example is in PCAR, okay? PCAR. As we can see here, kind of looks like nothing is happening. It looks like a sideways market, right? We go down, we go up, we go back down again. But according to the rules of strategy number 9, we're actually in an overall downtrend. And this is just a little bounce to the upside. You could have sold right there at the top and potentially made 9 points coming into the second week of August. And even if you missed that sell signal at the very top, guess what? There was a little bounce right here that made all the requirements, and another sell signal was generated, okay? As we look at DXCM, someone would say, hey, Steve, you want to stay away from this. This is a clear-cut downtrend. Not really. It's a pullback because 2 buy signals were generated. We have a little mini cluster here. Had you taken advantage of them, you could have potentially made 30 points in 1 week, okay? Where everyone else was selling, that's where all the rules and requirements came into play and said, these are actually buying opportunities. Let's look at SPLK, Splunk, all right? This is what we call a cluster of signals. Now, these are sell signals. Now, let me just point out, if you used one of our stop methods, once again, we have upwards of 6 different stop placements for you to choose one. And if you chose one of the least risk methods, I'll be honest, you may have been stopped out. Most likely you would have, with a small loss, not a big one, if you had taken any of these signals. But if you chose to pull back a little bit and give yourself a little bit more room, sure, some more risk, but at least some more room, you would have still been in any one of these sell signals, and you could have potentially captured 10 points when the market did fall out of bed, okay? Here's an example in Facebook as we go through the different phases. Here's the initial phase of an uptrend, and here's where everyone says, oh, Steve, you've got to be in a downtrend. Look, we have a bearish engulfing pattern right there. That's a bad sign. That signals the top. And look at all these down closes. 1, 2, 3, 4 down closes, and then a gap down. Very bullish. That chat room, I should say bearish. That chat room I go to says you've got to stay away from this, okay? Well, it's funny because strategy number 9 generated a buy signal in the middle to end of July in Facebook. And the stock jumped up 35 points in the next 4 days. Once again, this is why most traders fail, because they're listening to someone or something else that really doesn't have high levels of consistency. I did this 44 years ago. And every once in a while, I'd get a good signal. I go, hey, I better start listening to that guy. He was right last time. Or maybe I better start using this indicator because it worked really well. But over time, they really didn't have any high levels of consistency. I would have 1 or 2 good trades, and then I'd give it all back. So what you want is something that's consistent, a 2-step forward, 1-step back approach. And that's what strategy number 9 is. Okay, here's the same exact concept, but opposite direction. The first initial move is down, and then we start to bounce. This is where everyone says, hey, Steve, we made a real strong bottom there. That guy on TV says this bottomed out at the end of July, so you got to buy it. Look at, we just broke out of the short-term top, and this is kind of a nice high-level consolidation. This is going to bust out. Well, it's funny because strategy number 9 says, no, this is just a bounce in an overall downtrend. Another name for that is called a pullback. And all the rules and requirement came into play to sell right here. So where everyone was thinking we're going to take off, you could have sold and potentially made a quick 10 points, or we went down right to the bottom again, okay? Now, a lot of traders, when they have trouble trading stocks, if we do happen to go into a downward market, they switch over into commodities. So can this be transferred over into commodities? Well, you tell me. Here's a chart of coffee, all right? Now, this is in the beginning of July. Even off this short little 3-day sell-off, a buy signal was generated. Now, if you used, once again, a shallow stop, most likely you would have been stopped out. But if you used one of our more, I'd say, risk adverse, or I should say risk-oriented, where you had more risk involved, you would have been in this trade and stayed in and potentially been able to capture 60 points in coffee. Now, that's thousands and thousands of dollars profit that potentially could have been made. How about forex traders? Okay, here's an example in the euro Swiss franc. Most traders would have thought, look at these up days, Steve, we're in a real strong uptrend. But strategy number 9 said, no, this is just a bounce in an overall downtrend, meaning that these are all selling opportunities. It generated 3 sell signals, a cluster here, and look what happened. In 3 or 4 days, at the end of last week, I believe, it was 120 pips you could have made. That's over $1,200 per unit. So as you can see, we're showing you examples in commodities. We're showing you examples in forex markets. It can be applied to any market, any time frame. Let's go back to stocks, ADSK, all right? Here we see the pullback. Most traders would say, well, look, we broke that support here. We got to get out. Oh, the buy signal was generated right there, and 45 points coming into the first week in August. Same thing to the downside now in EXPE, Expedia. Looks like we're making new highs. Everyone's probably excited. You got to buy this. Well, a sell signal was generated right here. Coming into last week in August, you could have potentially made 25 points. Okay, let's look at the concept here on an ETF. All right, we've showed you how you can apply it to forex markets, to commodity markets. How about ETFs? Well, here's another great way to apply this. Here we see an example with the QQQs, the ETF that represents the NASDAQ index. Now, one way our students like to apply this is to apply this with indices or with ETFs that represent these indices and use them as market directional signals. So in other words, if a signal is generated on an index or an ETF that represents that index, it doesn't mean you're going to actually trade the QQQs or the spiders or the diamonds. It means that that's telling you the direction of where the market's going to go. And so you'll have a good idea as to whether you should buy that certain stock or maybe sell it or maybe get out. As we see here, this was in mid to end of July. We had a nice strong sell-off in the QQQs, the ETF, and then we gapped down here. Now, according to the rules of strategy number 9, that wasn't the beginning of a bad market. That was actually a buying opportunity, and a buy signal was generated here. Now, coming into the first week of August, the QQQs went up 15 points, okay? So if you didn't actually want to trade the QQQs, if they're too expensive for you, a $300 or $400 stock, you could have used this just as a market directional tool, because if you transferred over that amount into the Dow, that represented 1,300 points in a couple of weeks. So if you were thinking about going long a certain stock or maybe buying some options, this could have really helped you as a directional signal. Let's look at PDD, okay? Here we had 2 great signals, one here right at the top, and you could have potentially made 52 points. If you missed it, guess what? Off this little bounce, there was another signal where you could have probably made about 10 or so points. In Tesla, all right, here are 2 signals in 2 different directions. Now, at this point, strategy number 9 was saying we're in an overall downtrend. This is just a bounce. And you had a cluster of sell signals here, and in 3 days, you could have potentially made 50 points. Now, remember, obviously, not everyone would have made 50 points. You could have made 10 points. You could have made 25 or 30. Let's say you only made half. Let's say you made 25 points, okay? That's still a nice little profit in a couple of days. Now, as the stock continued its run, it started to go in an overall uptrend. So now, strategy number 9 generated buy signals. And based off these, you could have potentially made 80 points, all right? Let's say you didn't make 80 by getting out at the top, or maybe you only made half of that. Maybe you made 40. So if you made half of both of these, you maybe only made 60 points, but that's a nice little trade there. 60 points, only taking half of the potential of the move. Now let's go through the concept, the basic concept here on Moderna, all right? We'll share with you exactly the process that you would be applying. Once again, someone looking at this would say, okay, well, we're in an uptrend. Look at all these higher closes here. And it looks like we're just consolidating. So I'm bullish on Moderna. This was in June, coming into July and August. But then this happened, all right? And say that guru that you like to follow on TV says, you know what, you got to get out of this stock. It went up too quickly. It's most likely going to come down a lot lower. Then you should think about buying it. But for right now, get out of your position. We're in a downtrend, okay? This is the way most traders trade. This is the way I used to trade. I used to listen to someone else tell me what he thought the market was going to do. The one thing is I never listened to the market itself, the thing I was trading. I only listened to somebody outside of the market. So at this point, most traders would say, well, you got to get out. This is probably the time that it's going to top out and go lower. It's in a downtrend. But strategy number 9 said, no, it's not a downtrend. This is a pullback. This is not something to look to get out of. This is a buying opportunity, as long as all the requirements are met, though. You can't just buy because you think it's a pullback. You need some structure in the form of strategy rules. But if all these rules are met, if these indicators match up with each other and their relationship to one another generates a signal, well, then that's a valid setup. And guess what? We had a cluster of 3 buy signals right here in the middle of June, okay? They could have taken advantage of either one of these signals. You could have bought the put, I should say calls, I'm sorry, not the puts. You could have bought the calls, you could have bought some spread strategy, you could have actually bought the stock. Makes no difference, but coming into the first week in August, you could have potentially made nearly 300 points, okay? Now, did I talk anything about earnings? Did I talk anything about fundamental, about what the company was doing? Was anything mentioned here about support and resistance, or what the institutions were doing? How about, was anything mentioned here about earnings? Was anything mentioned here about some guy in TV or overbought, oversold oscillators? Absolutely not. We just used a few simple tools to help us generate signals, and then we simply got on board. That's how simple trading can be. You don't have to overcomplicate things. It's your overcomplications that make trading difficult. But once you learn to simplify things, that's when you become a consistent trader. Okay, let's review what we talked about today. Remember, a pullback is either a large, moderate, or shallow sell-off in an overall uptrend, or it can be a large, moderate, or shallow rally, a little bounce in an overall downtrend. The highlights of strategy number 9, once again, it's designed to buy low and sell high. It's a very premier, very powerful pullback strategy. It's a proprietary indicator-based method. Some of our methods are based on patterns, but this one is based off indicators and their relationship to one another. Now, we primarily shared with you stocks, but we also showed you how you could apply this to currency pairs, how you could apply it to commodities. We also have traders that use this with Bitcoin, with futures. I've used it with E-mini futures. So you can transfer it over onto any market, anytime, any time frame, any direction. And as well, it makes it ideal for option trading because of its structure. You're buying lower, therefore the premiums are going to be less, or you're selling higher, the premiums will be much less. So if you're an option trader, this makes it perfect. But remember, it is a requirement that you first paper trade. We do not want our students to just jump in and trade. Now, these methods are highly consistent, but consistency means that there will be losses from time to time, depending on which stop placement you use. The beauty of a consistent method is its ability to make back and recoup those losses, and all of our strategies are highly consistent. So ask yourself, do you think this pullback strategy can help your trading for the remainder of 2021? What do we have? 5 months left? 4 months left? I mean, we're past the halfway mark. I think your answer is yes. So because of that, we have a great special attendee offer for all of you taking time out of your Wednesday. We're going to offer you our strategy number 9 course along with the PTS Primo Charting Platform. Remember, this is the platform that you just saw all the examples based off of, and how simple it is to generate these signals, all right? So you're going to get the entire course rules, detailed video instruction, all the entries, all the exits and stop placement. And on top of that, we're going to include 1 full year of the PTS Primo Charting Platform. Now, this is a nearly $1,800 value. We're throwing this in with the price discount, okay? This is the educational platform that actually scans for these pullback strategy setups. This is one of the great benefits that we didn't talk about earlier, that you can come home from work and scan for these nightly and see what the setups are for the next day. For example, if you would have scanned for this, let's say just a couple of weeks ago, or actually last week, you would have seen that, well, it looks like there's an uptrend in CDNS, but let's go through the process once again. This is the beginning of a trend. You scanned and you said, well, you know what? According to the rules I was taught, this is a pullback, and the scanning process would have generated and seen that there was a buy signal. This is just a week ago in CDNS. If you had bought it, guess what? Potentially could have captured 10 points in 3 days with phase number 3 of the resumption of a trend. That's how simple it is. Now, if you're still not Convinced how powerful this can be? Let's look at another example. This one in DKS, okay? Let's say you're a member of the course. Let's say I had given this presentation a couple of weeks ago and you became a member, and you scan one night, last Thursday, in fact, and you see that we're in a pullback, and guess what? There's a buy signal. So you say to yourself, I like this. I like the company. I've kind of seen this before. I've been watching it. I've traded it before. I'm going to buy this. And guess what? The stock gained 30 points in just 4 days. All right. This just happened. I took this snapshot earlier today. This is what happened today. So you could have taken advantage of this last week. As I said earlier, I like to go to webinars myself. I like to see what other educators are talking about. And usually they have these phenomenal signals and phenomenal trades. And then you see the date, and it was last year or 2 years ago. This just happened 4 days ago, okay? And these are happening all the time. So a year from today, you will have wished you became a member of the Strategy Number 9 course. Why wait any longer to be consistent? Stop relying on outside methods, some teacher, some guy in a chat room or trading room, some method that you have no idea what it's based off of. We give you the full, complete course rules to Strategy Number 9. Okay. So let's tell you about our next level pullback trading special. All right. Remember, you're going to get the complete course rules to Strategy Number 9, along with a full year of the platform. There are so many other things included in the platform that I can't go into right now. I'd take the next 20 minutes talking about what's on there, but you're going to basically get 44 years of things that I've accumulated in my trading career that you won't find anywhere else except on our platform. That comes included with the scanner. So lots of great free education right there. Now, normally this would all cost you, with the two things included, $4,700, over $4,700. But here's what we're going to do today. We're going to discount that and only charge you $29.95. As you can see here, that's a tremendous discount. That actually is a savings of $17.40. That's a 35% discount. Now, we realize that not everyone can still come up with $29.95. So for a limited time, Pro Trader Strategies is going to offer you payment plans. That means you can come up with a small deposit, less than $29.95, much less than that, and still be up and running as early as today. You just establish a payment plan method with them, and you can still be up and running. So you don't even have to come up with $29.95. And that also includes the full year of the platform. So this is really a great offer, a time to turn your trading around, and a time to finally become consistent. I know that's what you've been searching for. So here's how to take advantage of this. My sister site is Pro Trader Strategies. Okay, they're in charge of all the tech support for the platform. I developed the platform with them and all the courses with them. And they're also in charge of all of the payment plans and the discounts and the pricing. So if you'd like to come on board, become a course member, you can either email them, but I would highly suggest giving them a call. There's absolutely no obligation. If you want more information about pricing or about setting up a payment plan, they would be happy to discuss that with you. Just call them at 310-598-6677. Now, that link you see at the very bottom will take you to the info page. You can also sign up there if you'd like. It's not a live link, but we just posted a live link on the chat box. So you can click that one on, and it will automatically open up a page for you. I'm going to leave this information up here. I promised I would reserve the last 10 or 15 minutes for any questions. So if you do, just go to your chat box, type them in, and I'll try to answer them to the best of my ability, okay? Let's see, someone is typing in right now. They're saying, can we use this on other markets? Yes, you can. I think you may have come in a little bit late, but you can use this basically on, like I said, we have traders use this on Bitcoin. In fact, I think we had a really good intraday or like a 4-hour Bitcoin setup recently. I'm sorry I didn't take a snapshot of that. But yes, you can trade it as well on that. Can I trade off your platform? No, unfortunately, we don't have that ability. We've been in talks to do that. We've been approached by different companies to be able to do that. But honestly, I trade myself. I've been trading for 44 years, and most traders I know have at least 2 or more platforms running. The way I like to use it is I look for education and information on the PTS Primo Charting Platform, and then to enter my trades, I just toggle over onto the other platform that I trade off of. So it's not very difficult, and it's probably very common amongst most traders, but no, you can't trade directly as of yet. This may be something that we discuss and have in the future. As I said, we've been approached by other companies to do that. But for right now, we're just staying an educational company in terms of educating as opposed to actually trading off our platform. But it is really simple, okay? Someone's asking, does this work better with the PTS XT or the bracket breakout method? Oh, there's good questions. Basically, what this student is asking is, can you apply other methods that we have with it? I haven't really experimented. Those are good questions. I basically have just used this as a standalone. This is probably something I have to look at, but I've never really used this in conjunction with another method because it works so well just on its own. So if you have those other methods, feel free to experiment. I think I'll do so myself, but I think our consistency has done so well just as a standalone method. We've really seen no other reason to try and use it with another one. I know other of you people, maybe students of ours that also have other things that we also teach. And a lot of times you like to combine them. And a lot of times you can increase your consistency for them. It's just that the consistency on strategy number 9 has been so high that we haven't really experimented with using with it, anything else. Next question, where or when do you exit the trades? Well, remember, this is all included in the course. Don't worry, we won't leave you hanging. As I said earlier, we have upwards of 7 different exit methods, and they're really simple. And one of them is even auto-generated on the platform. This is something I didn't go into, but all you have to do is double click on the menu and it will generate these exit levels for you. So it all depends. Remember, every trader is different. I know one of the great faults of all educators is that they think everyone should trade alike and everyone should buy at the same price, get out at the same price, place your stop at the same place. That's what basically what a system is. Everyone trades the same, kind of like a robot. But if there's anything I've learned in my 44 years of trading, it's that that's totally false. No two traders should ever trade alike, because the reality is everyone comes with different, should I say, baggage, because some traders are very squeamish when it comes to risk. They don't want to take a big risk at all, and so they want their stop to be at the very least risk at all. Where others may say, no, I've got a big account size, or I don't care, I can sleep at night. I'll take more risk so I can stay in the trade longer. So that can affect the way the trade pans out. Still, others can say, listen, I want to get in right now. I don't care about the price. I just want to get in. Or others want to say, you know what, I want to finesse this a little bit and get better trades. I should say better entries. We teach you different things in all these aspects, including the exits. I'm the type of trader, because of my background, I like to get in and out quickly, because on the floor, I was trading 50 times in the first hour, getting in and out in a matter of minutes. So that's kind of my nature. So I will use one of our methods that gets me in and out quickly. Whereas someone else could say, no, Steve, wow, I don't want to leave a lot of money on the table here. Some of these are great trades. I'm the type of trader that wants to get the most bang for his buck. So I want to use that exit method that you teach that keeps you in longer. Okay, then use that one. So yes, we provide you with roughly about 7 different exit methods, and we teach you all these in the course, but it's up to you to decide. Okay, same thing with entries, same thing with stop placements. The main thing that stays the basic same is how you identify a setup. So everything I was showing you today, where those green or red arrows are the setups. Now, once you get that setup, it's up to you to decide how you want to enter, how you want to exit, and how you want to protect the trade. This is where you have to become a part of the process. Remember, I would be doing you a disservice if I just said, well, all you have to do is just buy the same place, sell the same place. That's the way I do it. So that's where you should trade. That basically is a recipe for disaster. Most likely you would all lose, because everyone trades differently. You have to trade according to your own means. That's the great truth in trading. And that's what separates us from other webinars you may have attended, okay? But these are good questions, great questions. Any more here? I see people are still asking about, it's just, they're asking about other markets. I should have showed a lot more of the markets, but trust me, we have traders that trade this on currency pairs, futures, commodities, Bitcoin, so it makes absolutely no difference. Wherever there is a pullback that meets all the requirements, that's where you will potentially see a signal being generated, okay? So it really makes no difference. The strategy number 9 doesn't know if it's looking at a stock. It doesn't know if it's looking at an hourly chart or a tick chart. It just looks at these indicators and price and their relationship to one another. So it doesn't have any idea what it is that it's being based off of. That's the component of a great strategy, because it doesn't need to just fit into a certain market or a certain time frame, okay? Any more questions? Remember, there's absolutely no obligation. If you have questions about pricing or you want to just figure out, well, how much would I have to put down for a payment plan? Please feel free to call Pro Trader Strategies. There's no obligation. They would be happy to give you a quote at 310-598-6677. And then you can decide for yourself. The only suggestion I would make is to not take too long to make a decision. A lot of students in the past have told us, well, you know, I'm going to think about it. And they go on trading their method that they spend $10,000 from some other website or something that they've been using for a while that has no consistency. And after a series of devastating losses, they finally say, you know what, I'm going to contact Pro Trader Strategies and get that strategy number 9. But after waiting so long, the price is back up to $4,700, $4,800. In fact, if you wait long enough, it may be higher. So if you're really serious about taking your trading to the next level, you know, watch the video we're going to send all of you today. Make your decision, but don't wait that long, okay? Because I don't want you, I'd rather have you spend $29.95 as opposed to closer to $5,000, okay? And remember, we'll be there with you every step of the way. This is an online course, but you also all get my personal email address. You can contact me whenever you'd like with any question you have. So we really want to be with there every step of the way. We are first and foremost educators. That's our sole purpose, to educate. Okay, if there are no further questions, this brings us to the end. I just want to thank you so much for taking time out of your Wednesday. I know you could have easily gone to another webinar or been trading, but I hope I taught you something today about pullbacks and how to recognize them and how valuable they are, and that there are only 2 styles of trading. One is a continuation style, and the other one is what we spoke about today, pullback trading. And if you're a pullback trader, if that's your style, strategy number 1 is perfect for you, okay? As we close here, I just want to say thank you once again. And as you take one last look at our disclaimer, I wish you all the best of luck, but most especially, I look forward to all of you becoming students of mine in the strategy number 9 course. I wish you all the best of luck. Have a great day. Hope to see you in class. Bye-bye.